Welcome to Charts Today. My name is David Linton, and today's edition for Wednesday, the 19th of April, comes to you from London. And we'll start by looking at currencies, then some stock markets and commodities and US tech stocks. And the big story yesterday was the announcement of the UK election. So we will also look at just what's happening in the FTSE 100 constituents. So we start with the dollar index. Dollar looking weak. Yesterday really selling off against a basket of currencies. Sterling would have been one of the drivers there. We've activated the downside target of 97.70. That's about 2% downside. So we're just seeing that dollar weakness kicking in. Euro strong yesterday. A lot of talk around the French elections at the moment and the uncertainties there, but we are seeing a strong euro. So we'd need a real shock there that is not priced in for this to reverse. And of course, the downside and medium-term targets are still very much there for the euro. So it does still have a bearish outlook in the long term. Japanese yen we're seeing here is strengthening. This is dollar weakness showing through here, although we've been quite flat the last few days. Sterling jumped yesterday, really did leap out, and that gave us a new move. We had already had a target activated last week of 129.42, and that's where we jumped to. So we're seeing quite a big jump there on sterling. And if we look at the sterling euro rate, we see that jump as well, nudging 120 yesterday. Against the Swiss franc, we see the jump 128, and against the Australian dollar into the 170s. So that really big move there as well in sterling terms. The S&P 500, we saw markets, just US markets, just a little bit in the doldrums still, and we're just seeing really the last several weeks, it's just a slow deterioration that's showing through in the short term. Some downside targets here of around 2%. So US market just struggling at the moment. Nasdaq much the same. The medium and long term pictures look good, but the short term pictures look bearish. Same for the Dow and the Russell 2000, just bearish, pretty well short term across the board. Futures markets this morning, the S&P 500 and the Nasdaq E-mini both showing a little bit of a gain, so we may see US markets open up. Now the FTSE was down over 200 points yesterday, 2.5%. We see that big sell-off here, and we'll look at what drove that yesterday. But the main driver was the rise in the pound. Most FTSE 100 companies, certainly the big FTSE 100 companies, the big weightings in the index, have a lot of their earnings in foreign currency, US dollars and euros, and so consequently, with their global operations, repatriating those profits to sterling means that their profits will be lower. So that just had a big impact on the FTSE 100. FTSE 250, less currency-laden earnings structure, so that actually didn't react as badly and is still looking pretty bullish above the cloud. The DAX, DAX is also bearish in the medium term. The Nikkei 250 bearish on that stronger yen, and the Hang Seng Shanghai and the BSC Sensex all just below the cloud, and the Aussie index, which has been looking pretty strong of late, also saw quite a strong sell-off yesterday. So stock markets pretty well globally had a pretty poor day yesterday. And we look at commodities, Brent is just falling back somewhat at the moment, and WTI much the same. US nat gas is sideways at the moment, and copper had a bit of a sell-off yesterday too, just recovering a bit this morning, but bearish, just turning bearish below the cloud. So global demand outlook there just changing a little bit, and we see here that gold is just holding its position. This upside target of 1371 still activated there, but we are just seeing gold is still looking pretty strong. Silver, not quite so strong in the short term below the cloud, and if we take a look at US government bond yields, the 10-year yield just sitting at 2.2%, so quite a way back from that 255 level that we saw earlier in the year. Just the outlook on US interest rates not as bullish as it has been. Apple looking bearish below the cloud in the short term. Google holding its position quite well, as is Amazon. Facebook had a strong day before yesterday, but still hugging below the cloud, and the same is true of Microsoft. Now let's look at the FTSE 100. We go through alphabetically. You'll notice that not much change until we get to some of the bigger stocks. The resource stocks, Anglo American had a real sell-off here in the short term and is bearish in the medium term as well. You'll notice that a lot of the big falls were when stocks were already below their clouds in the medium term or the long term. So it's the bearish trend stocks that fell. We saw Ashton actually fell out of bed yesterday, and it actually had been happening day before as well, before Easter. But we saw here that it's turned very bearish in the short term. AB Foods holding on very strongly, prime market driver there, so that's looking pretty strong in the medium and short term. No real signs of yesterday there. AstraZeneca, we saw it on pharmaceuticals, the big weightings in the FTSE, we saw it. Pharmaceuticals. BAE Systems, so Barclays Banks were down quite strongly as well. Barrett's looking very strong on the upside there. BHP Billiton, another resource stock, of course. BP, a heavy constituent in the FTSE, was down pretty heavily. BAT was down as well. British Land looking strong. So the smaller sector stocks not looking as bearish. Bunzl certainly sold off short term, and we saw that this morning as well. Burberry down very strongly this morning on their results, down some 6%. See Carnival, Centrica fell heavily yesterday, recovering. And so we just see this across the board. So we can almost go and choose the stocks. If we look at GlaxoSmithKline, another pharmaceutical stock that very heavily, building companies like Hammerson looking very strong. HSBC banks looking very weak there. We see that anything global brands like Imperial Tobacco, that's down as well. IHG down. British Airways actually, or International Consolidated Airlines, looking quite strong there. Again, if we look at things like land securities, strong. Property stocks looking pretty good. Lloyd's didn't sell off as strongly as some of the other ones in the banks. Marks and Spencer's looking very strong at the moment, out of interest. And then if we look at Next, recovering quite strongly after their sell-off early in the year. And again, we look at Pearson's been very bearish on all three time frames. Persimmon actually looking strong. So property stocks looking pretty good. Randgold Resources, not as big a sell-off because the gold price having an effect there. Reed Elsevier was one of my scans that has been performing quite strongly over the last few months, but just selling off again quite strongly on those foreign earnings. Rentokil Initial, the same thing, selling off very strongly on foreign earnings. RBS has been just falling on the short term anyway, and Shell, as we expect, oil having a big effect there as well. Sage Group still holding on, looking pretty strong. Sainsbury's looking pretty good. So we're seeing in retail it wasn't so strong yesterday. It was really in the big heavily resource laden stocks that we saw that. Standard Chartered, another bank, showing the weakness there. Tesco's actually not looking so strong, and Taylor Wimpey actually looking strong as well. So we're seeing a theme throughout here. Vodafone, obviously big strong foreign earnings, falling strongly there as well. So it just shows you how watching sterling can have a very big impact on your international stocks. So stocks that have got international earnings. WPP, another one, just selling off there as well. That's it for today. Keep an eye on those charts. Until tomorrow, happy charting. See you then.